Welcome to Retirement Unlocked with Larry Heller. Your life, your way, unlimited possibilities. Join us as we explore how tailored financial planning and investments can help you navigate life transitions with confidence. Let's dive into this week's episode.
Hello and welcome to another Retirement Unlocked with your host, Larry Heller. Today, we're going to do a countdown to retirement, a 5-year planning guide. Okay, Larry, so how do we begin planning? I'm assuming we're talking about 5 years out from retirement?
Yeah, of course, you shouldn't wait until you're 5 years out to start thinking about how to plan for retirement. You really start actually in your 20s. But as you're getting closer now, it's a little bit more real. You can see the kind of the end game there. So I thought it'd be great if we kind of go through a countdown of the last 5 years and some of the things that we see that you should be really kind of implementing as you hit into these last 5 years.
All right. So how do we lay the foundation?
Okay. So the first one is, this one is really, really timely, is really starting building up cash reserves. Now, why do we want to build up cash reserves? Well, when you get to retirement, you're going to need to withdraw, or at least most people are going to need to withdraw money from their portfolio. And we like to say that you want to be able to draw money from cash, short-term investments, things that don't have the fluctuations, because you don't want to have to sell something that's down. And as we record this, we're in the middle of the tariff situation, and we can see the extreme volatility that we're having in the stock market. So think about it. If you retired on April 1 and now you got to raise money from your portfolio to withdraw, you're going to be doing it at a very rocky scenario. So start thinking about this, because we say 2 to 3 years, because that's usually the time horizon, 3 years that we see the market has recovered in the past. I mean, there's no guarantee in the future, but start building that up. So when you do hit retirement, you can avoid having to sell in the down and the downsides.
So you can also do some catch-up stuff, right? So if you haven't been able to save in the past, there are ways, a number of years out for you to, and I don't know if they still call it the catch-up, they used to.
Yeah, they still call it the catch-up, but now there's kind of the enhanced catch-up. So for 2025, the max you can put it in your 401k is $23,500. But if you're 50 years old or older, you can catch up by putting another $7,500 in, to a total of $31,000. But if you're in the ages 60 through 63, and a lot of times you may be with it when you're within the last 5 years of retirement, you're able to put away 150% of the normal catch-up. So for a total of $11,250. So when you add that with your 23.5, you're able to put away $34,750, just under $35,000 for those 3 years. So take advantage of that. And if you haven't made the corrections for this year in 2025, make sure you adjust your withholdings with payroll so you can maximize that as you get closer to retirement.
That I didn't realize it was that much. I mean, that seems to be a pretty substantial ability to go ahead and deposit. Now, so we're going to go ahead and we're able to do the catch-ups and stuff. What are some other things that you focus on 5 years out?
Yeah, so we start thinking about the benefits of the post-tax contributions to your 401ks, and maybe did you do some Roth? So should you do some Roth, depending upon what tax brackets you're in now, what tax brackets you're in there? So we start kind of thinking about where you're going to be withdrawing this money down the road, from which accounts. And a lot of these become really tax planning opportunities. Mm-hmm. And this is really, really crucial because when you get into retirement, these accounts now, if you're if you're retired now, you have to take requirement distribution at 73. I'm sorry, if you're over age 60, if you're retired in 1959 or earlier, your requirement distribution is 73. If you're born in 1960 or later, your distribution is until age 75. So if you're retiring in your 60s and you don't have to withdraw from these retirement accounts into your mid 70s, there could be some big required minimum distributions and a much bigger tax bracket later on. So you want to kind of start thinking about, are you going to be withdrawing some of that earlier and maybe taking advantage of lower tax brackets? So that's really some of the things that we start thinking about 5 years out and where you're going to pull this money out in retirement. And start to really think about how much money you're going to need in retirement and creating a financial plan. So where is the income coming from? Do you have Social Security? Do you have a pension? How much you have to pull out? What are your expenses going to be? And that's really the other thing, kind of the laying the foundation, which is really not a financial goal. It's more of a personal goal, how you're going to live the next act, the second act in your life, I like to call it. And that's where you're going to live. Are you going to stay where you are? Are you going to downsize? Are you looking to buy a second place? Now that you're going to be retiring, a lot of people don't realize that you're probably going to spend some more money because you have more free time. Yeah. So are you going to travel? Are you going to go out more? What are you going to do? So trying to kind of figure that out and put the game plan in. So when you're at that point, you really feel comfortable about moving into retirement. Because I don't care how much money, when you turn that spigot off, people start to get a little bit nervous on how much they are going to spend.
All right, so we built a financial plan. We've made some of those decisions. Now we're fast forwarding to 3 years before you retire. That's the next milestone.
Okay. So now just to expand a little bit about what we talked about visualizing your second act. Now you're 3 years out. So now you, again, looking at trying to figure out what the non-financial, what are you going to do every day? So we have a lot of clients that retire and they've got enough money, but what is going to make them get up every day? So some of those non-financial planning, we've talked to life coaches on the podcast here that specialize in that. So trying to really talk about that and try to figure out what's going to get you motivated. And then also looking at some big ticket items and maybe being able to pay for some of those ticket items before you're in retirement while you're still working, because those can have impacts on your retirement cash flow. And then, like I said, now you're getting a little bit closer to retirement. We want to build those cash reserves. So looking at that asset allocation 3 years out, should we reduce our allocation to equities? Should we start thinking about changing our reinvestment strategy on investments of dividends and interest income to a more cash distribution to build that up? And what is the right allocation in retirement? It's not putting all your money into cash and bonds, and because that may not keep up with inflation and you may run out of money. So what is the right asset allocation for you, and determining what it's going to be now and start to make some adjustments so you have the right asset allocation when you get to retirement.
So we've laid the foundation with a good financial plan. We've started to make some other investment decisions. You're visualizing what the second act is going to be, whether that's you're going to continue to work a little bit or you're not going to be working at all, that kind of work optional sort of thing. Now we're 2 years out. Now, I don't know about you, but this is when my anxiety would actually start creeping in a little bit, because like I can see the finish line now. Where do we go from here?
Yeah, so now we're going to really firm up that retirement cash flow and the tax strategies. We're going to, if you haven't already met with a financial planner, really critical now to really start really fine tuning what that strategy is going to be. Should you be taking your Social Security? And if you're below normal retirement age, when should you delay your Social Security? How that come into play? Start thinking about that decision and running some numbers and seeing where it's best, not only for you, but if you're married, the Social Security decision could impact your spouse. So knowing what you want to do, firming up the cash flow. If you're lucky enough to have a pension, start really seeing what that's going to be. And if you have a pension, are you taking life only? Are you taking joint rights of survivorship? Really starting to fine tune those. And again, further fine tuning your asset allocation as we get closer. And now really start thinking about those tax efficient withdrawal strategies, because if you're going to be withdrawing from your your non-retirement account, yeah, you have to build up the cash there. But if you're going to be withdrawing from a different account, you may want to build up the cash there. You may want to have different asset allocations. We have clients that have different allocations because they have a Roth account, they have a retirement account. The two spouses may be of different ages, and they have the joint account. So one overall asset allocation is great to know that, but you may want to have different allocations in each one of those accounts. So looking at that, deciding on that, firming that up, retiring that as we're getting closer to that finish line.
The next phase here, 1 year out, this is one of the favorite things that I've heard you talk about on other podcasts before. And I'm not going to tell everybody what it was. I'm going to let you reveal it. But 1 year out. Okay. So finalizing everything, really making sure that all boxes are ticked in order for you to really hit the finish line, whatever that looks like to you. So we figured out the income, but you ask your clients to do something that I think is really, really smart. Do you mind if we start there?
Yeah, we start there.
Okay.
But what I basically said, let's do a retirement lifestyle dry run. So both personally, kind of maybe take a day or two off and kind of visualize now that your retirement. And then also projected wise on the retirement income while you're still employed. Now you might have come up with your expenses. Some people I know have a hard time in trying to figure out what they're spending. Other people, at least certain professions out there, come in with spreadsheets and know exactly what their expenses are. But if you're not, start doing what we call a dry run. And there's great ways of doing that. One of the ways that we basically do is that most people put all their money in their paycheck in their checking account, and they just spend on that. But one of the tricks that we try to do before your retirement 1 year out is have everything go to your savings account, and once a month, move money over into your checking account. And if you do that for 12 months and you didn't have to move anything else over, you'll have an idea what you spend. If you're short, you need to move some additional money over in that year. At that time, write that down, and you're getting an idea of really what you're going to spend. Now, it may not be exact because, like I mentioned earlier, when you're retired, you may be spending a little bit more money, but it's giving you an idea of, okay, can I live on this money? Is this money working for me? So making sure that you have all your liquidity and your emergency reserves all being built up in the 1 year time frame. So really kind of visualizing that and trying to have a dry run is what we determined. So that's an interesting concept that a lot of people like that idea.
I love that idea. I love that idea on a lot of different levels. And a lot of people who are getting this close to retirement also have a substantial amount of vacation days saved up. And so you can take that time off. In fact, you probably should, to do that actual psychological, physiological, physical feeling of retirement. If you can take a couple of weeks off and really see what you're going to do with your time, that can be really big. Now, you've shared a story previously about somebody who ended up doing this retirement dry run, and some things changed. Would you mind talking a little bit about maybe a client experience in doing the retirement dry run?
Well, yeah, I mean, there's a couple of scenarios here that we talk about, but one of them is clients wanted to sell the house and move to a different location. And so one of the things that we talk about is before you buy a new place down there, maybe you should rent. So we've had scenarios where clients have done that and they've rented somewhere and they realized that really wasn't the spot for them. So really trying to kind of put yourself into the shoes of what it's really going to be would be something that we would recommend. And things change. We've had corporate executives that retire and they realize that they need something else to go about, and what do they want to do? We've had clients retire to explore some of their personal dreams, photography, second act careers that they want to do. So trying to do those and trying to figure those out earlier has made a big difference.
All right. What else do we need to do this close to retirement?
Yeah, so now we're confirming all the income sources. Maybe not it's 1 year, maybe a little bit closer, but if you have a pension, they're going to send you exact numbers. You're going to know exactly what your number is from Social Security. Make sure that you've gone to all your different employers over the years, and if you have any retirement accounts still sitting there, you may want to consolidate them. Understanding your benefits post-retirement. Are you over 65? And going to be eligible for Medicare for health insurance needs, or are you retiring before 65 and you need to look at other solutions such as COBRA or the exchange? So transitioning that, if you're with a bigger firm working with an HR department, that's great, but a smaller firm, you really want to kind of figure all those out yourself. So all those things are kind of ticked off in place. So when the day comes, you're all prepared for that.
All right. Well, the day's coming now, Larry. We're knocking on the door of that last paycheck that we're ever going to get. Where do we go from here?
Yeah. So now you're 3 months out. You really want to finalize and sign all the paperwork. Well, if you have a pension, putting that in place, making sure that all your, like I said, vacation time and sick leave was all taken care of. If you had an HSA, making sure what do you want to do with that, collecting all the documents, signing all those documents, putting it into place, and then finalizing all the income strategies and the expenses that we talked about, and really determining now how you're going to withdraw the money out from which accounts, and starting and making sure that everything is there. So now you really are paying yourself. This isn't a dry run anymore. This is going to be finalized, and you want to make sure which account that you're taking up to maximize the income that you're going to gain, but also minimize the taxes that you're going to pay. So once you are at that retirement side, it should really be all set up for you. You shouldn't have as much of the anxiety if you have a financial plan. If you have a financial plan, if you have one of what we call our reservoir strategy, which again, you can look at some of the podcasts we've done on that, you'll be prepared for this time, whatever is going on in the market, whether it's up, whether it's down, you're going to be ready, prepared. You're going to be able to enjoy and get ready to enjoy that second act.
All right. So Larry, okay. So now we're 3 months to retirement. Everything is done. We've gone through all of the different, major 5 steps to make sure that you're preparing for it. How do you bring all of this home and make people understand that working with you is going to make this process so much cleaner and easier?
Yeah, because we've actually gone through each one of these steps with our clients. So when they're ready to transition into retirement, they're prepared. And then we can execute each one of these strategies that we're talking about, whether it's Roth conversions, which accounts we're taking it out from, putting this together and showing them in a financial plan and a cash flow analysis, accounting for inflation and additional expenses year by year, that they are going to be able to enjoy their retirement. I got to tell you, Matt, most people, when we do the retirement plan and the cash flow analysis, underspend in retirement because they're so worried about running out of money that they spend less than they could, and then maybe they don't enjoy as much as they could. Having a plan in place and knowing where everything's coming from and seeing it year by year in numbers gives them a lot more comfort when they are retired.
Yeah. All right. Where should they go if they want to find out more, or if you have an existing client that just has some questions, where can they go?
Yeah, so they can go to our website, hellowealthmanagement.com, and you can click right on the Calendly and schedule a 20-minute call with myself or one of the other advisors here, or you can feel free to call the office at 631-248-3600.
And if you know somebody who is about 5 years out from retirement and they're freaking out, this is a great podcast to share with them so that they can find out what are the different milestones and the different sorts of timeframes that they need to be looking at to make these decisions. It's one of the reasons why Larry does this. This is a great resource for you to be able to share with your friends and family so that they can unlock their retirement. So for Larry Heller, this is Matt Halloran, and we'll see you on the other side of the mic very soon.